For me, there is only life. We are immortal. And I tell a lot of people that, and they're like, what do you mean we're immortal? You're going to die. And I'm like, yes, I will die in a physical sense, but essentially, energy can't be destroyed. It can only be transferred.
Perceptual distortion occurs when our mental system automatically distorts environmental information by shaping and selectively excluding certain information to compensate for the conflict between what we expect and what the environment is offering us. This will be done in such a way that we will believe a shared reality exists between ourselves and the outside environment, thus avoiding any pain and defining a shared reality as a correspondence between one's beliefs about the environment and the actual environmental conditions that exist. If you are distorting market information, you are not sharing a reality with the market, and you are also indulging yourself in an illusion. Everyone, welcome aboard to another session of Forensic Analytics, where we traders reconstruct prior events that can take place on future price development. On today's session, we are going to look at the price action on the S&P 500. Are the bulls taking profit, or is the bear back in town? Well, let me tell you, my friends, that the bear has been always in town, and as the saying goes, a broken clock is also right twice a day or twice a year. Maybe this is a larger clock, right? Twice a year. Everyone, welcome aboard to another session once again of Forensic Analytics. I hope each one of you are doing fine and great on this Wednesday, July the 24th of 2024. As you guys can observe in the chart, we are experiencing some turbulences in the price action for the S&P 500, correct? And I would like to touch a few variables based on harmonic ratios, right? The data set, the congregation of ratios that we were looking a few months back, also from last year, and also to mention the importance of distorted information, right? Because any distorted information can lead us to bad interpretation of the technicals that we're trying to respect from the legends of the past. As you guys can observe in the current screen, or on the current screen, this is a W formation. We're going to be touching those data points based on geometric figures, right? And also the right proportion, which is normally defined as symmetry, symmetrical formation, the measurement of the right proportions. Here on the chart, you guys can observe is the price action on the major US index, right? The US index, the S&P 500, is composed by 11 different industries. By the way, we're now seeing some rotation among other sectors, right? We're going to be touching those data points and variables later on as we move forward. What we can observe here in the price action is, as you guys can hear in the soundtrack, right? Energy cannot be destroyed, but can only be transferred. We're dealing with energy here also in a similar manner, the wave of the move, right? Within the price action, we mentioned before, the competing forces among buyers and sellers always trying to outsmart each other. However, there are other traders who like to step in the market, take what we see, and move forward, right? Move into the next opportunity. By the way, none of this represent financial advice, but rather an interpretation of the technical information. As we mentioned, energy cannot be destroyed but can only be transferred. Is this energy that was printed on the S&P 500? This is basically a bearish butterfly, or also arguably a deep crab pattern based on harmonic ratios, based on the weekly time frame, the primary trend, as Charles Dow suggests in his book, right? And not in his book, but on his theory, because he never wrote a book precisely, though there were other technicians that were closely working with them, okay? So where we are on the S&P 500, the billion-dollar question. In order to understand where we are, right, we always need to understand where we were, okay? And to put some context into the chart, you guys already know, we're gonna go visiting some of the variables that lead us to the current price action, right? And as many of you know, there are divergences, simple technical application that can be define, or can be used to define a momentum, right? Momentum shifting basically of a trend, either on a downward pressure or an upward traction. We are going to navigate those levels and also navigate where the S&P 500 is. Are the bulls taking profit? Those who were pretty much a bull during the entire trend, 2 years almost, right? So let's go into the momentum shifting structure, right? One of the technical information also back in 2022. Here, a very simple trend line, right? Very simple trend line was presented with the price action creating back then. This is a chart from October 17th of 2022. We're heading towards a 2-year mark. Why this is important? Because we're approaching a cycle, right? We're gonna be touching the cycles in the price action. We were doing a previous work also for the periods of risk between 2025 and 2026, back then in 2023 even, right? So we were not too bear in a sense. We're monitoring the price action conservatively, right? Why? Because the price action, as pattern recognition, right, as pattern traders, we were looking at these divergences on the weekly structure. This was the first piece of information, one of the key variables for momentum shifting, right? Lower lows in the price action, higher lows in the momentum indicators, indicating that a shift in the trend was about to occur, once again based on the weekly time frame. Okay, by the way, we're going to be trying to do this more educational also for others to join us and see what we do here is completely technical, right? And also, as the name suggests, we would like to respect the legends of the past with proven strategies. Okay, so here, a divergence. This is normally known as a class A bullish divergence, one of the strongest type of divergences, right? We have A, B, and C, A being the strongest one, which by the way was indeed the case on the S&P 500. Okay, so let's go back into the current information, right? Because that was a moment that many analysts and traders needed to shift their approach to being bear, basically, right? Or bear meaning leaning more towards the downside back then at 3,600, basically, again at the bottom, right? So now let's move into the current price action. Keep in mind, this chart is from October 17th of 2022, basically at the bottom, right? So now let's go into the current price action. Here, what we presented before, right, was at the levels here. And again, this is not to mention that we are right or wrong. This is only presenting the technical arguments, right? Because back then we indeed printed, also this can help traders identify major shift in trends, right? On primary trends based on the Dow theory, okay? Primary trends, not a secondary trend, okay? By the way, this is a secondary trend of the primary trend. In order to understand that level, this upward traction, this wave of the move is the primary trend, and the secondary trend occur here at the 50% correction. Dow theory once again come here into place. We cannot talk about Dow theory when we don't understand the main concept, okay? So here, Dow suggests, or Charles Dow suggests, that a 50% correction, basically a 33%, between 33% and 66% of the prevailing trend will pretty much occur, right? A correction of the primary trend known as a secondary trend. And this is what normally tends to mistake or tend to misguide traders, right? Confusing that the secondary trend is the main level that will break and we pretty much go lower, right? However, the variables that we presented back then and that were indeed in the cards, once again based on Charles Dow, was the 50% correction of the prevailing trend, respected fine as support. Other variables for momentum shifting, what was the case? A divergence. We mentioned class A being one of the strongest one. Here are these levels, correct? Lower lows in the price action and higher lows in both momentum indicators. Very easy approach. We don't have to complicate things. You guys know that sometimes simplicity over complexity, as we repeated many times, is at times better than overcomplicating things, right? This is a very easy approach. Lower lows in the price action, at least within the major time frame, right? They repeat on any time interval, on the hourly, on the 4 hour, the daily, and so on. This one was on the weekly time frame, right? Lower lows, signaling that a momentum shifting structure was presented back then. And since then, we then started presenting other arguments. Along the way, speaking of divergences here, right? Class A being one of the strongest one. Now, the other one that many of you probably know is the hidden bullish divergence. Hidden bullish divergence implies continuation structure or continuation of the prevailing trend that started to be upwards, right? Right at the lows, a 3,500 region, we then started to construct, right? The higher lows in this case, between the price action within this segment of the move, okay? Higher lows in the price action and lower lows in the momentum indicators, also in both MACD and the RSI, implying HDB, hidden bullish divergence, implying continuation of the prevailing structure that was indeed respected, right? Since then, a 4,500 region, this one was a key determining factor where we broke back then. I remember we broke the 200 daily moving average, where indeed there were levels of concern. However, after recapturing the 200 among other variables that we presented, there were indeed variables to remain cautiously optimistic, right? And this is where this major formation came into place, because back then we identify the symmetrical formation. This is another conventional pattern. Many of you already know these are neutral patterns because they can also break upwards or downwards. However, the combination of many other variables in confluence can help us gauge better information and determine our decision-making process, okay? So now that we are moving into different technical application, this one was a pending, once again, a symmetrical formation that you guys can observe here clearly. Also, the way these levels can be projected is identifying the height of the wedge, the larger formation, and why we plot the height of the levels towards the upside. Because again, the hidden bullish divergence was dictating a continuation structure, correct? So again, if we apply all the levels, right, I believe we also printed a bullish bar here on the daily time frame, and therefore we will start gauging information, connecting all the major data points based on the congregation of harmonic ratios, Fibonacci sequences, right? We anchor the height of the wedge, the exponential structure, the lows, the highs, the lows, and therefore this projected move is where we were interested basically since last year, right? And as you guys know, we like to talk here with facts. We never try to pretend to know anything or everything, right? As many of them are pretending to know. However, we would like to present facts here once again on the S&P 500, another example of the technicals being respected as of now. That major move measure move of the structure was presented on November the 1st, right? November the 1st, we had back then the measure move of the structure as a projection towards the upside from the lows at 4,200, right? Given the conditions back then. Aiming, the first target was 5,100 because there are different ratios between the legs here for butterflies. They can range from the 1,272, the 1.41, and ultimately the 1.618 as we were moving accordingly back then. Each of them created some turbulences in between. However, now we have achieved the golden section. And this is where we are currently on the price action for the S&P 500. So therefore, are the bulls taking profit and the bears showing in town? As I said before, the bear has always been here among us, right? And this is why it's important to construct an unbiased approach and react accordingly. Whether you're a bear or a bull, the market doesn't care what we think. However, we need to find to the best of our abilities to execute these positions. Okay, so this is where we are on the S&P 500 as of today. Today is July the 24th. It was pretty known that we were looking for that price action. Let's go back into the current information based on the weekly structure. So now that we achieved those levels, okay, from November, since the projection was made, we were trying to move accordingly. As I said before, divergences are one of the simplistic way of analyzing the markets, right? At least, or in my particular opinion, as a swing trader, I like to plot them on major swings on the weekly structure and the monthly. Here, the previous one here, right? Sometimes I get referred as Marbull 6, right? When it's time, and other times as Marbear 6, right? I've been called either of those. You guys can call me any name that you guys like. However, I know that I'm a swing trader, a technician that respect the levels based on the legends of the past. Why I'm bringing divergences here back again? Because here, back then, we had the Class A, one of the strongest bullish divergences. What do we have now currently in the price action? Also in combination with a major W type formation on the weekly structure. Not only the pattern, correct? Not only the very structure, however, another confluence in the price action, printing higher highs in the price action. I'm gonna point out this in orange or red, right? Given the case. Orange, higher highs in the price action, and also lower lows or lower highs in this case in the momentum indicators. This implies a shift in trend, my friends, right? The same way that we perceived previously, right? This is why it's so important to understand clearly the technicals and not pretend to know, okay? Because again, there is a period of trial, and when you're going or piloting in that period of trial, you can make many mistakes along the way. Of course, this is not a 100% approach, right? We're gonna be finding many mistakes along the way, but it is very crucial also to respect them accordingly, right? Removing any preconceived bias, okay? So now that we are indeed at the completion point of this major W formation on the weekly, clearly after the completion point in the projected move towards the 56, by the way, we are in positions within the room. We took position here. We have a range on the S&P 500, okay? And the overspill levels also of the 0.618 here was within our range at 5703, right? Where did we go on the S&P 500? 5721, right? Less than 1% risk. Once again, this none of these represent financial advice, but rather an interpretation of the technical information. Where can we go from here on? That, my friends, is up to you to make your better judgment, right? We present what we see, and the ideal scenario, the correction here will be somewhere along the lines that I'm going to go over those details in our room. Why I'm going to do this? Because plagiarism tend to be one of the issues along the industry or among the industry, right? Many participants in the market they take the ideas of others, present as theirs, and then this is where plagiarism occur, okay? So we're gonna keep our levels. You guys already know, those who are in the room already know the levels. Everything is posted in the trade setup also, as well as the daily time frame. Now there are a minor move here on the daily time frame, okay? On the daily time frame, I'm sorry, on the 4-hour time frame, there was another pattern, okay? Another pattern on the 4-hour time frame. I'm gonna remove all the drawing tools here. There is a level I was tracking. I anchor the connecting points, the major connecting points on the upper trend line of this ascending broadening wedge. This often also indicates that a shift in trend is about to occur. Here between this gap on the other CME exchange, we can plot the connecting point here at the lows. Okay, so I'm gonna refer that as an imaginary line here, right? Because on the CME chart, we have that connecting point. And this is where we are currently on the price action for the S&P 500. Now, from here on, as you guys know, there are patterns that tend to outperform and underperform also depending on the condition of the market, right? Bullish structure in a bullish conditions will always perform better or outperform. Conversely, bearish structure in a bearish condition will always underperform. However, what happens when we have one pattern, a bullish condition, in a downtrend or vice versa? Well, this is where the pattern recognition is also very important, my friends. Now that we broke below the resistance line here, what I normally do here is I anchor the connecting points based on harmonic ratios, right? The recent leg of the move between the discernible low at 55.04, the the lows to the highs. I normally tend to look for the B point of the structure. The B point of the structure is one of the most important data points when it comes to harmonic ratios. Why? Because the B point will dictate what type of formations we may have in the price action, okay? So if we go back into all harmonic ratios, where did we bounce first? Here, if we start connecting, okay, the lows back to the highs, we bounce off the trend line and also at the key technical level, also below the key technical level, I'm sorry, at the 0.786, we bounce through, and now are we printing another M formation in this case in a downtrend? Because on the weekly, we do know that we have some concerning levels based on, again, a major divergence on the weekly and also a major W type formation for the bearish butterfly. One of the strongest type of harmonic structure based on my particular experience through the years. The butterfly, either bullish harmonic structures or bearish harmonic structure, in this case the butterfly, are very powerful. However, let's keep in mind that on the weekly, okay, on the weekly we have a major bearish structure. On the 4-hour, as of now at least, until something changes, we now have a pending M formation that can go all the way to the 1-72, 54.46, and 1.41, 54.16, and the last one, the 1.618, in similar context as a weekly structure, the largest wave of the move, right? The 1.618 goes to 53.72 in the short-term trend at least, right? So can we go there? I do not know. I only anchor those data points. And this is where I'm tracking on the S&P 500 after being in position at 57.03, okay? There was a range between 56 and 67 or so, and also 57.03 as the overspill of the major bearish structure on the weekly. So now, can we go here, right? That is what I'm tracking currently on the price action for the S&P 500. And am I only tracking this one? No, all of my work comes at least 2 steps before the current information. And this is a chart I was tracking a few days ago, 2 days ago, I believe, before this upward move, right? I'm going to indicate where normally the downward pressure start to develop in or start to strengthen the argument for a more downward pressure, right? So let's go back into the 4-hour time frame. Once again, this is based on the 4-hour. This is the pending formation I was looking for, right? still remaining in my positions, understanding that the lower trend line normally generates that upward traction, right? Either at the 0.382, common levels of retracement, the 0.50 and the 0.618, with the 0.618 being the key technical level that must be challenged, right? To recapture a support in order to continue the upward traction. However, knowing that the ascending broadening formation is often a pattern that indicates that a shift in trend may occur, I then also combine other arguments between the technical information, okay? And therefore, we indeed found resistance here at the 0.50%, where I sort of knew that this structure may perform, right? Until now, it's a pending formation until achieving these levels. Once again, this is a pending bullish structure, a pending formation on the 4-hour that may create some type of reactive moves, right? Are going to perform or underperform? We will see. Why? Because on the weekly, we do know that we have the major W formation, okay? Major W formation that was respected pretty much after a month, right? Again, this is based on the weekly structure, which each candle represent 1 week, okay? So now that we are here below the trend line, by the way, this was 2 days ago, I believe, before reaching 56.31, we're now breaking below the trend line, right? Can we go there? We will see, my friends. We never really know. We only present the technical arguments that we see and act accordingly. Am I going to enter along for short-term traders or scalpers? This might be an opportunity, right? Why? Because on the 4-hour time frame, we are entering over or undervalue conditions, okay? So before reaching the PRC, the potential reversal zone of a butterfly, we may also experience some divergences also, okay? Now the key level here, we are already testing the 100%. That can be the case here, printing a lower, once again, a lower low in the price action, another divergence class A, okay? Slightly divergence here on the 4-hour, where undervalue conditions are already entering on the RSI, right? The relative strength index is presenting consecutive undervalue conditions first at the first test reaction of what also a bullish cipher, okay? This one was a bullish cipher, so this can give us an information that if the bullish structures are going to start to underperform. And this one can be a clear example giving that something larger of a bigger magnitude is presented on the weekly, okay? But again, I don't want to lean too much bear now. I don't want to be the bear now, but only presenting the technical arguments, because to be completely fair also, it's worth noting that we may now have a shark pattern also, right? A 224 completion point, okay? And this one leads me to another information, because the 224 between the legs B to the D is known for the complementary ratios of shark patterns, my friend. And normally this one generates another upward move between the legs C to the D only for not breaking lower, okay? If we break below the 224 here between the legs B and D, we then can remove these arguments, because the 224, at least at times, generate an upward traction or a reactive move towards the 50% or the 0.618, okay? Can that be the case to remove some of the selling pressure? We will see, right? Another retest of these previous highs, right? And then correct normally give us information of a bearish 5-0. Bearish 5-0 is oftentimes a continuation structure, right? Normally a precursor of a bullish shark, retraces to the 50% or the 0.618 without being able to recapture a support, and then the downward pressure continues, right? And then of course we start gauging other M and Ws along the way. But as of now, this is the current information, the daily time frame, or the 4-hour, I'm sorry, the 4-hour. All of this of course is being presented in more details in the room. On the 4-hour, we have a descending broadening that also generates false breakdowns, okay? But again, on the weekly, we still have a major W formation, okay? So we cannot disregard that the major formation, despite the conditions on the 4-hour, are presenting levels of concern, okay? Why? Because the W formation, once again, on the weekly, okay, if we remove all the conditions here, we only are starting to present the follow through also of the prior weekly session close that presented as a bearish harami, a Japanese candlestick suggesting reversal, right? So now this is where we are. If you guys are cautiously tracking the levels on the S&P 500 and remove any preconceived bias. Try to remove all the junk, okay? Because this is a serious business, right? We need to treat this as a business, right? And not come here with my idea. Where do I think the market will go? Because the market honestly doesn't really care, right? This is only an interpretation of the technical information from, again, what the buyers and seller are transacting, right? It's basically the sentiment, the psychological levels, the wave of the move, right? That normally portrays in sine waves as a heartbeat also, right? We can observe these patterns in between and react accordingly. Hussam, my friend, good to see you here again. And Peter Shippers, awesome guys to see you here. Okay, more of this is going to be presented and updated in the current chart or in the room. We present all the variables. We presented the execution, the setup, basically in June 28th, right? A month ago. We already knew these levels of concern were in the chart, the completion point, and now we're seeing the downward pressure based on the weekly. The weekly takes time to develop, okay? However, nothing is precise, right? Nothing is 100% accurate, so therefore we would like to move accordingly, okay? Now to finalize the stream, I'm going to touch a very brief comment on the levels on the S&P 500. On the price action for Bitcoin, right? We previously presented the PRC, the completion point of the bear cipher, which indeed also creates some turbulences. However, the other argument that we presented is the jumping across the creek, right? Until, of course, something changes, okay? We got the trading range. This is the spring action considering the upward move. However, as long as we remain as support, there are key levels to break. And this is, of course, will be eliminated if we break those levels of support. As of now, this is a completely normal move or normal reaction on the price action for Bitcoin, right? We achieved the PRC once again of a bear cipher. The next one after, if we keep moving higher, will be the 0.886 as 70,000 basically, right? And of course, we will know if we are going to retest the upper trend line of the trading range for another sharp pattern, and the 224 will be pretty much a new all-time high. Again, as of now, we achieved the projected move at 68. I'm continuously remain in my longs, right? Of course, I have my stop losses in place also to not allow and lose at least 10% of the move, considering that I enter at 56,813.50. Okay, those are my levels. Okay, and I'm not gonna give my levels here on my stop loss. Why? Because we never reveal where we would like to exit, right? You guys know market makers, right? Anyways, my friends, thank you for being here, and I'm referring about the real market makers, my friend, not other rooms around there. Okay, everyone, thank you for being here. This is the levels where we are on the price action for Bitcoin. Certainly a level of concern that is presented on the readings, okay? And if you guys like this type of content, please, everyone is welcome to visit us at marvop6.com, where we empower technical analysis with harmonic ratios, inspired by the legends of the past, with proven strategies. What we do here is with facts, my friend. We not only talk. Everyone, enjoy the Wednesday, and I'll see you guys on the next one. And remember to live a life with an attitude of gratitude. Cheers.